There was a statistic that was put out by lifehappens.org a couple years ago that said people would rather get a root canal than talk about insurance.
Ben Affleck talking about how his youngest son was angry because he wouldn't buy him a pair of $6,000 shoes. Hey team, Jim Cripps here with the Charge Forward Podcast. I want to say thank you for joining us today. I have a special treat for you, Mr. Eddie Knight. He is a financial advisor, proud husband, proud father, proud Christian, helping lead others to financial freedom. Eddie, thank you for joining us today.
Glad to be here, Jim.
Absolutely. So, a lot of our, I just think, core beliefs are very similar. And I got to give a big shout out to the person who introduced us. So Miss Valerie Kemp, CPA there in Ashland City, who's just, in my opinion, the best CPA in Tennessee, introduced us, maybe 6-8 months ago?
Something about that, yeah. Valerie's one of a kind, the nitty-gritty in Ashland City.
That's right, that's right. Big personality and takes great care of clients, both small and large. The thing I love most about her, other than her personality and the fact that I've known her, let's just say a long time. I'm not trying to put an age on her. That's inappropriate. But she does tax planning and tax strategy, whereas a lot of CPAs just take care of your taxes when you drop them off.
I find that's one area where, being in the financial advising industry, you realize there's really two kinds of CPAs. There's the historian kind and the kind that really think outside the box. And I agree that Valerie's one of those that she'll, think out there and put some ideas together instead of just saying, here's what you did, here's what you owe. Yeah,
absolutely. Well, a lot of those things can't be done in the rearview mirror. You've got to connect the dots as you're going through the year.
There's a lot of things that December 31st eliminates.
That's right. That's right. Well, kind of speaking about timelines, this is a busy time for you guys.
It is. First of the year is always fast. It picks up usually about the third week of January. People get through that holiday lull and oh my goodness, how much money did we spend over the holidays? And then it's like, okay, New Year's resolutions, I want to save better, I want to plan better, whatever it is, and it ramps up and gets busy really quick. And then you've got the typical stuff. April 15th's coming, I got to make a contribution to something to reduce taxes. And you get a call from somebody like Valerie or another CPA saying, hey, can you help a client out? So we're hopping pretty good.
That's right. Well, and this is going to come out about mid-April, so odds are when this comes out, there's going to be just a couple of days for people to button some things up.
Yep, unless they're wanting to file extensions and think outside the box, but April 15th's coming.
Now, if you will, share the extension piece real quick, just to kind of throw that out for people, because I honestly didn't know that you could file an extension and some of those things could be done past April 15th.
There are some things, again, you want to consult with your advisor, whether it's a CPA or if there's a lot of CPAs out there that do financial advising as well. But there are things that you can and things that you can't, and when in doubt, ask. Don't just assume.
That's right. Be interested enough in your own destination or your own future that you ask the question.
100%. Assumptions are dangerous.
That's right. That's right. So, we've talked a couple times about how people get into the careers that they get into. And, mine has been an interesting path, and yours has too. Most people would say getting into the financial industry in 2009 would have been a very risky proposition. But how did you get to that?
Well, I guess you say I kind of got lucky and fell into it. 2008 rolled around. The employer that I was working with was not in this business. I graduated from college with a degree in biology and chemistry and went into work with a chemical company right in Ashland City, and worked for them till 2008. And evidently I was the easy overhead maybe to get rid of because I was the young guy, the young low on the totem pole guy, and found myself right before Thanksgiving unemployed in 2008, and then met the gentleman that's my managing partner or managing principal today. He said, have you ever thought about a career in insurance? And I regrettably laughed at him. I said, I don't even know how to spell insurance. I was like, you're talking to the wrong guy. But fortunately, I gave him the time of day, sat down with him. March 31, so a week from this coming Monday, will be 16 years in the financial services business, so to speak. And it's changed a lot over the years, but never intended on getting in here, but I love it. You couldn't pay me enough money to do anything different.
Well, and I think a lot of people cringe when they hear insurance.
People, there was a statistic that was put out by lifehappens.org a couple years ago that said people would rather get a root canal than talk about insurance. And that was a legit, I forget exactly what the percentage of people, but it was unreal. And it's like, why do people not want to talk about those things? And you think about mortality, you think about, life is not certain, and it makes people nervous. And some people, they avoid it for that reason. They avoid it because that's going to be expensive. There's a lot of different reasons, but it is one of those subjects. If you don't want people to talk to you on an airplane, just say, hey, I sell insurance and some other stuff too, and they might turn around and look the other direction.
They very well may, but at the same time, it's critical, especially if you have a family. And I'm not just here pubbing your business or patting your ego here. Some of my best friends or some of my favorite people that I get along with just fantastically, our insurance is either a piece of their business or is their business, and it's because even though that is such a I don't want to say taboo. That's not really the right word. People are so apprehensive about talking about it. Insurance agents suffer through that in order to help people.
It is I was told very early on, this is extremely noble industry if you do it the right way.
That's right.
There's a gentleman out there, he gets quoted in insurance circles a lot, Zig Ziglar, about if you help enough people get what they want, you'll never be in need of anything.
That's right.
So there's a big nobility. That's one of the reasons that I stuck in the business. I was fortunate, unfortunate. It's kind of one of those things where you're glad, you're not glad it happened, but it changed how you view this business. I'd been in the business a little over, right at a year. When I first got in this business, it was one of those things of, hey, I'll do this till the economy turns around, I'll go back to what I was doing. About a year in, maybe about 9 months, I met a lady that called into our office that I worked out of at the time up in Springfield, Tennessee, and met with her, ended up writing insurance on her, some of her children, and not even a full year after that, probably about 7 or 8 months later, got home late on a Tuesday afternoon, been running appointments, over the dinner table, meeting with people. And the 10 o'clock news came on probably 30 minutes after I got home. It'd been a long day. And as they're, panning across a on-the-scene accident up in the Ridgetop, Goodlettsville area, I was like, I recognize the front of that car. That tag, that vanity plate on the front of that car, that looks, it's probably not. And next morning, I'm going out, hop in the truck to drive to the office, and about 7:45, phone rings, and it was the mother that I had met with and her adult daughter, who was about 1.5 years, 2 years younger than me, been hit by a drunk driver and lost her life. 8 or 9 year old daughter, our grandchild of the mother that originally started all this. And I sat at the same table where I'd sold the policy and made the promise of, if something happens to you, we're going to pay, because that's what insurance is. That's what it does for people.
Yeah.
And then to turn around less than a year later and be filling out the paperwork to file the claim, it changes how you look at this business. The business, you're no longer just in the business is in you, and it changes your mentality. And there was a couple years ago, the magic of Facebook. If you've got it synced with your contacts on your phone, it'll throw up friend suggestions and stuff like that. And I had one pop up, and I went, I recognize that name, because you look at my phone, I probably got contacts in there that are 25, 30 years old. And the the contact that showed up as a friend suggestion, I clicked on it, and I was like, oh, that's the mom that I met with. And I'm thumbing through there, and there was a picture of the granddaughter who's now a junior in high school with her grandmother going to prom. And I was like, that's awesome to see.
Yeah.
It's not just that immediate impact of we paid for a funeral, we did some other things. We not only paid for a funeral, but we made it where grandmother could adjust because she became the primary caregiver for that child. And you can't put a price on that.
Well, it's one thing. Inevitably in that scenario, there's going to be a grieving process. There's no reason to exacerbate the grieving process by the panic of how financially is this going to work, or can it work? It just removes a lot of the stress. It does not remove the stress, because there's a lot of stress with the passing of a loved one, but it does take a huge weight off of that person as they figure it out.
100%. I mean, it's if there's stories upon stories that you can Google and search online at lifehappens.org, and I've already mentioned them once, but it's a great resource that I've used, in putting some things out there to clients when they go, well, what's the whole purpose of this? And I mean, while there's good stories like that, there's also bad stories. I mean, I've experienced I don't want to say begging someone, but almost, you have a wife that's, I think of a specific instance, and there's a wife that's bought in, we need this, honey, we've got a mortgage, we've got all these other things. And the husband says, oh, I've got this accidental death policy. It'll pay because I'm probably going to die as a result of an accident because of my line of work, which statistically is not probable.
Right.
It's possible, but it's not probable. And then literally, I don't know why 7 to 8 months is always like a time frame, but just a few months later, you hear a funeral announcement. It's like, wait a second, turn that up. And it's that literally the guy that I had said, hey, you really need to do this because your wife sees the value in it. You really need to do it. And
your heart hurts for that person. It does.
I went to the funeral home, and I had the wife look at me and she goes, Eddie, I don't know what I'm going to do. And I'm like, I'm sorry. I'll pray for you, because at that, it wasn't my choice not to sell it to you. It was your husband's choice not to go through with it.
Sure. Well, and I would say this just across the board. I mean, being a good steward of finances, investing, insurance, all those things, they're not sexy, they're not fun, but they are necessary. And, it's hard to separate them. I guess years ago I wondered why people that were in insurance were also in financial advising, or why they were kind of married. And now, as a dad and a husband, it really does kind of make sense, because it's to protect your family.
Yeah, I mean, it's real easy. And there's guys in this business, and they do a great job in the area that they work in. We talk about in our office all the time. A lot of people take that siloed approach to any kind of financial decision. They've got their money manager over here, they've got their insurance guy over here, they've got there's a specialty in advising for just about everything anymore. But marrying all those together is such an important thing, because they all affect each other. Clients ask me all the time, because we talk about auto insurance. I don't sell auto insurance. I don't want to sell it. I've got some great friends that sell it, do a phenomenal job. But I have clients ask me all the time, well, what in the world does my auto insurance have to do with my investment account with you? And I'm like, it has a lot to do with it if you hit the wrong person.
That's right.
And you don't have proper protection. My job is not to sell it to you. It's just say, hey, you need to talk to your guy about this, this, and this to make sure that the work that I'm doing is protected and you don't end up, with a lawyer or somebody knocking at your door saying, hey, you owe my client some money because you did something wrong.
Yeah. Well, and I hate to just keep coming back to her, but that's one of the things I love about Valerie is Valerie has people sign off on her talking to their other advisors. And I would suggest that to anybody that is watching this video right now, is if you are an adult and you have children, you have a net worth, you are headed towards a goal, your advisors, if you have multiple advisors, which I encourage you to have multiple advisors, you need a great tax and CPA person. You need someone in the banking industry. You need real estate professionals, potentially, if you're in that space. You need a financial advisor and an insurance person, a couple of insurance people, most typically, because you're going to have auto, you're going to have life, you're going to have homeowners insurance, etc. Hopefully, a good umbrella policy. All those things. And there's no reason for you to be the middleman, because your advisors may have a conversation that just occurs organically, and they come up with a better strategy for you because you weren't playing telephone. You weren't relaying messages back and forth. So I highly encourage anybody out there, especially if you have a net worth of, let's just say, $500,000 or more, you have a family and you are headed in a certain direction with goals and aspirations, please make sure that you connect your advisors so that they can speak and create the best strategy to present to you on your behalf. Would you want to add anything to that?
Yeah, I mean, we talk about, again, I mean, when we're meeting with clients, I ask them all the time, is there, I'll go through the round robin, if you will, of, do you have a CPA? Do you have an attorney? Do you have a real estate professional? Do you have a banker that you deal with? And yes. They check all the boxes, or at least some of them. And I was like, okay, when is the last time that all these people sat down in the same room with you and said, okay, what are we doing together to make your life better? Mm-hmm. And that's where working with a holistic advisor that really is looking at every angle and has the tools to do so, that's where they can almost become a quarterback for you. I know that's kind of sounds cliche. The client's still a coach. Mm-hmm. They still set the tone. Here's the goals. Here's what we're shooting for. Here's what I want to accomplish. But having that person that is down in the weeds a little bit, mm-hmm. so you don't have to be, where they're saying, hey, you've got options here. We need to coordinate with those other advisors. And I've coordinated with Valerie on clients in the past, and other, financial professionals in other lines of work that, it's important to have everybody on the same page, because if somebody is out of sync, if you will, it can be catastrophic. You've got money placed in one, the thing that I talk about sometimes is, your investment guy may be great, but if he's only focused on investments and growing that nest egg or if he's generating it and where it's positioned, it's creating a tax issue, mm-hmm. your CPA is going to have a fit, because they're going, what are you doing every year that's making, because they're the ones that are having to deliver the bad news of, hey, your taxes are going up. They get the blame, so to speak, when it's really not even their fault. And so it's like, hey, we all need to talk together and collaborate to move the ball, so to speak, and everybody wins.
Yeah, absolutely. Well, I kind of look at it like, to use your coaching analogy, is the customer or whoever that is the head coach. Mm-hmm. But you need an offensive line coach. You need a defensive coach. You need there's multiple disciplines within that you need people who are more well-versed, know the law, especially in taxes and in other things that get affected by legislation. What has changed for this year? Because last year's great strategy may be this year's terrible strategy.
That's definitely, just change is constant, regardless of what line of business that you're in. And, regulatory changes, and not just regulatory, but law changes as well. Anytime you have a new administration in, we get a little busier because people are going, what do we need to do? Mm-hmm. Whether it's positive or negative, there's changes, and then tax changes. And then you've got every company that you buy things from, whether it's a financial product, they're changing their rules all the time. New products. We talk about the thing that's overlooked by so many people is just planned obsolescence now. Yeah. Stuff wears out a lot faster than I think my mother's still using, I think in the last year she finally bought a new microwave, and it was one when I was like 4 or 5 years old. Mm-hmm. Stuff doesn't last that long anymore. No. It's companies figured out, well, we might need to not make it last so much so we can still turn a profit. Like it or don't, that's just the reality that we live in. Yeah.
So what do you suggest as far as what's a good cadence for, let's just say somebody's working with you. They've got they're headed on a path. They've got, let's just say, somewhere between $500,000 and $1 million in investments, and they've got teenage kids. They're looking at college. They've got normal life going on. What's a good cadence for you to meet with them and kind of optimize?
My favorite answer to give to any question is it depends. It depends on how many moving parts they have. At a bare minimum, at least once a year. At a bare minimum, with some of our clients that we're working with, we've started utilizing some very unique software when it comes to cash flow management and just having visibility of what's going on. We don't budget. We're big on nobody likes that word. I don't like that word.
Right.
I like to fish, so I really don't like the word budget because it cuts into my fishing budget or my fishing allowance, whatever. But with somebody like that, that's really, they're wanting to get a little more granular. I mean, we have clients on we call it a quarterly calibration, where they come in and it's like, okay, here's the ebbs and flows in your world. Do you like what you see? Do you not? Do we need to make changes? Is there like red button issues? It's like there's a warning light flashing that we need to address now. But those are typically with people who have a lot of, ups and downs and moving parts going on in their world at the same time. So it depends on where you're at and just your level of comfort. I mean, some people are set it and forget it, give me the Cliff Notes version once a year and we'll keep moving. And some people are like, look, I want to, especially when they're nearing retirement. It seems like, not just with myself, but with other advisors in our office, it seems like as people start nearing retirement and big decisions, those gaps between, hey, we need to talk, get a little shorter and a little shorter,
Sure.
down to just a couple months.
It gets more real.
It does make it a lot more real.
Yeah. What do you see as just some overarching typical, if you're going to win long term, this is a good basis for that strategy?
Balance. Again, one of those things that we talk about a lot. And balance between protection, savings, and growth. Anytime you get lopsided on any of those things, it creates a potential for something catastrophic. If you do a great job investing and grow your assets, but you're still running with your state minimum coverage that you had when you were in your early 20s, and you hit that guy that's a neurosurgeon at Vanderbilt and do damage to him, now we have problems. There's a potential for loss. But it's all maintaining balance all the time. And that's where that review comes in so important, because you may not even realize that you've gotten unbalanced. You have a good couple of years in the market, things grow. Yes, you need to rebalance investment accounts, but you also need to rebalance the other parts of your model that aren't directly connected to your investments.
Yeah, no, that makes absolute sense. I kind of look at it like having tires rotated and balanced. That's going to be every 3 or 4 months, depending upon how often you drive. And the investments are kind of the same way. I'm not saying that we need new tires every 3 months, but we just need to take a look. Exactly.
And it's the thing that a lot of people get really tangled up in is and there are advisors in the world that prey on this, is they focus on rates of return. Are rates of return important? Yes. Is it the most important? That's up for debate. But finding an advisor that is looking for the potential loss places in your world and plugging the holes in the bucket, if you will. I mean, it doesn't matter. You have the greatest rate of return in the world, but if there's holes in your bucket and you're losing more water than you're putting in, the bucket's never going to fill up. You're never going to achieve those goals. So we find, again, it goes back to that balance. If we make sure that we're avoiding unnecessary things that disrupt our financial world, whether it's taxes, fees, it's amazing when we've gone through planning process with people, the stuff that they uncover, and I'm like, hey, what's this all about? And they're like, oh, that's something I bought back, when I was 24, 25 years old at my first job. And I'm like, do you know what it does? And they're like, I don't know. Can you tell me? It's amazing how many times that happens 20 years down the road, and they've been spending, a couple $100 a year on it. And it's like, well, does that really add up? It does eventually.
Especially with compound interest.
Oh, goodness. It's like, well, that little $500 a year mistake, if you factor in inflation, the rate of, if you'd have kept it in your world, you could have done something with it to grow wealth. That number gets really big really fast, and people don't realize, I'm costing myself money, 20, 30 years down the road from that singular decision that I made that I forgot about.
Yeah. What do you see as kind of a typical aha moment or wake-up trigger for people that maybe have been disengaged from their future planning and all of a sudden are knocking on your door?
I think the misconception that and we've all seen the examples of it, but the misconception of if I pour the money to it, i.e. I start saving, I figure out how to save 25, 30, 35% of my income, I can overcome the 15 years I've just been sitting there doing nothing. Mm-hmm. And it's the law of compound numbers does not work in your favor. Even if you, and we've all heard this, whether it's you listen to one of the financial gurus on the radio or internet or whatever, or you're reading financial books. I mean, starting early, even if it's just a small amount of money, and building that momentum. The way an exponential curve works, it gets steeper, and when you shave off a year or two, you're shaving off significant amounts, of potential in the future.
Sure. Well, and I could be creating a monster here, so I'm gonna share what we do in our house. So. You saw Castle the other day. We saw each other out at the depot in Springfield. So shout out to the team over at the depot. They do fantastic business. Great food, and we were actually both there for birthdays.
Yep, father-in-law's birthday was a couple weeks ago. Some travel, weather, everything else had gotten in the way. But yeah, I looked up and I was like, "Hey!" I was like, "There's Jim." I was like, "He's coming in." And I'd sent you, and I think I'd mentioned to you, I typed a text message out. I don't know if you ever do this, but I unfortunately do this more times than I care to admit to. You type out a message, and then somebody calls or something happens, draws you away from the phone, and you never go back and hit send. And I intended to send you a birthday text that morning to say, "Hey, happy birthday, have a great day." But I got to do it in person. So
yeah. No, it was just a happy accident there. But so I started taking Castle to the bank before he could walk, and introducing him to everybody, and then again, I may be telling on myself here. So I told him very early on that if we went to the bank and we were putting money into the bank or we were transferring money to savings, then he got a sucker. And if we were taking money out of the bank, no sucker. So he always wanted to know how much money we were putting in the bank. And this is a big shout out to Larry Roberts and his team there at Pinnacle Bank in Ashland City, because those ladies that work in that bank, they have been there. Again, I'm not trying to date people here, but Miss Betty Jo, shout out to her, because she set up my first checking account when I was 6 years old. And that was a while ago. So I take Castle in, and he always called it the Nice Ladies Bank because it was all nice ladies that worked there. But he knew if we were putting money in the bank, then he got a sucker. And if we weren't putting money in the bank, then there was no sucker. And so he's been mowing yards the last few years. And this past year, got a little more serious about it. He's got a commercial mower these days. And, he mows his first 2 yards, and he's got a couple $100 to put in the bank. And we're trying to decide, how much are you going to keep out to spend, how much are you going to save, and how much are you going to invest? And I said, well, how much do you have there? And I think it was $220. Okay. Well, how much are you going to invest? How much are you going to put in the bank? How much are you going to spend? And he goes, I think I'm going to go ahead and invest $220. Great plan long term, but I said, buddy, you're going to have to spend some money. You're going to need weed eater cord and a few things. And of course, he wanted to spend my money for that. So we had to have the discussion of how business works. And so he made his 3 piles, and we went to the bank, and he put that into the bank and then made his investments. But he is a whiz on a financial calculator when it comes to planning out investments. So he knows that at his age, I think it's $4,700 that he socks away is $1 million at retirement. You take just a couple years off of that, and now you got to get more like 7,000 is $1 million. And so at 11 years old, he knows if I put this much money in there on an average return of X, then that's $1 million. So he's looking at that going long term. And then it even factors into what kind of vehicle he's going to want to purchase when he turns 16. Much like Dave Ramsey, I kind of stole this from him. So Dave Ramsey matched the first X number of dollars that their kids put in, and then learned later that he needed to put a cap on that. So we will match the first $10,000. So if he wants to buy a $20,000 car, we'll match 10 to his 10. And then he can buy up to a $25,000 car if he wants to put 15 in. But then we also have to factor in how much does he really like that car? Because at 16 years old, let's just say that number is $6,000 equals $1 million. If he wanted to spend that extra $5,000, well, that's almost $1 million that he's essentially taking out of retirement by spending it on the car. And I think the earlier you can have those types of conversations with your kids, probably the better off your family tree will be. What are your thoughts? Am I too far off the path there? Am I creating a monster, or what do you think?
No, I mean, having those conversations early, the value of a dollar, how compound interest works and the potential of it. And I mean, teaching them how to use a calculator and looking at it. I mean, I've handed off a couple of books to my oldest is a big reader. She loves to read, and she's read one or two, and she's like, oh, wow, that is interesting. And all of a sudden it changes the conversation, and they're asking questions about, well, what if I did this? Or what if I did this? That's where you want them to engage, and have that hunger for learning about it. And there's, a lot of different systems for making it work. Part of me, you don't want to rain on the parade of, this is the value of doing it. But then there's like my over the top, because of the line of work that I'm in. I'm like, well, yeah, but you need to be aware of doing it the right way, and this and this and this and this to avoid, potential pitfalls in the future. Because I guess that's where you graduate from teaching it to a kid to they've got that basic understanding and building blocks, and now as an adult, when you have those conversations of, do you understand what lost opportunity cost is in your world, and what things can make this? So you're laying a great foundation. It is something that we're, me and my wife are still trying to get better at. But it's a challenge, because goodness knows everything has an ad. They come on your phone, they come on TV, they come in the middle of, shows that you're watching, even if you're paying a subscription fee to something. But getting them to understand things cost money, and the value of, saving a piece of everything that you make is the point that you've got to drive. That's the thing that's missing from so many people, is they just don't understand the value of saving a dollar. And that's the biggest trouble that we have when we're working with clients, is they just their income is less than their outlay.
Yeah, and that's a huge problem just across the board. And randomly, I saw a video yesterday, in fact, and it was Ben Affleck talking about how his youngest son was angry because he wouldn't buy him a pair of $6,000 shoes. And it was some limited edition Nike, blah, 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 fill in the blank with whatever it is, right? And my son is a shoe fanatic. And so we have these types of conversations. And so Ben Affleck's explaining to his son, I'm not spending $6,000 on a pair of shoes for you. And his son will, why not? We have money. And he said, no, son, I have money. You're broke. But he said, I'll tell you what, I'll buy you a lawnmower. And if you want to work for it, you can mow yards and get that $6,000 pair of shoes. Well, no big surprise. Once he started mowing yards, he no longer wanted the $6,000 pair of shoes. And so I think it comes back to understanding how money works, how you earn money, how how do you use money to make more money?
Yep.
All those factors. And I don't think enough parents are having those conversations with their kids.
No, I mean they don't. And I can preach to myself on that. Should I be having more and maybe some more focused in certain areas? Absolutely. And you can't. It's just like with anything with kids. You can't wait till they're about grown and ready to leave the house to start trying to instill, because you've missed a lot of the time for that message to bake around in their mind and to really set in and to lay those fundamentals. I mean, my mom did a great job of saying, you need to save money.
Mm-hmm.
Was always perfect at it? No, but it was one of those things where she always drilled it in my mind, and her parents as well. Have money set aside, because you never know when factors might change. The way I view it now is you never know. It may not be a negative change, it may be a positive change.
Mm-hmm.
And having access to capital to invest in a business or to avoid, debt because of something that goes sideways. It's no longer just an emergency fund. Now it's, okay, my savings are an opportunity, good or bad.
Yeah, absolutely. Well, it absolutely reduces stress. We were very fortunate in that right after we got married, we went to, and some people will love this and some people will hate this, but we went to a Dave Ramsey Total Money Makeover event. And my wife got completely on board. And before that, neither one of us, I don't think at that point, were terrible with money, but we weren't great with money. And there were 5 couples. We all went to this event. And fast forward, it took us 39 months to pay off all of our debt, including the house. Another couple did it in 45 months. His brother did it in 49 months. The other 2 couples went backwards. One was in a worse financial situation 3, 4, 5 years later. The others lost their home. And so it really showed me that everybody can receive the same message and interpret it differently, or their willingness to execute the plan will have variable levels of commitment.
Sure. There's a lot of different, I'll use a phrase from my grandmother. There's a lot of different ways to skin that cat.
Mm-hmm.
When it comes to building, your financial future. Dave Ramsey, I don't agree with him on everything. There's some,
Agreed.
I do agree that his fundamentals of living within your means, saving money, and having a system, 100%. You have to have a system. Financial success doesn't just happen. You don't just wake up one day and go, hey, I'm successful. Even people that win the lottery, I mean, that's evidence right there that success doesn't just happen, because what is it, like 99% end up broke within a year?
Oh, yeah.
Because they don't have a system, and they don't know how to handle money. But it's, find a system that works for you. I mean, we've got a very unique system for us that looks more at how to make your money stay flexible depending upon whatever the outside circumstances are, to where we can pivot with whatever happens in the economy, whatever happens in, from a political standpoint, or just from life changes, to where we're not locked into something that, we've got a great net worth, but it's all locked away and we don't have any access to it.
Yeah.
Because unfortunately, that is where some people end up. They wake up and they have all these goals and aspirations. They go, wait a second, I've locked myself out of all my wealth.
Mm-hmm. And I do see that, and I will say that I struggle with that question, because I really like the Roth, and that is the majority of what we do. But there are restrictions. There are downsides to that. So you're constantly at battle with yourself, or you're constantly trying to make sure your strategy is still the right strategy.
100%. I mean, and it just goes back to that maintaining balance, because even with things like a Roth or an IRA or 401k, all those retirement vehicles, that's an important part of most people's financial world. I mean, if you statistically look at it, other than a person's home, their 401k is where they have the bulk of their net worth. when they get ready to retire. And change affects them as well. Legislation changes, tax law changes. You look at what your situation is right now, look where you want to get to, and what the potential changes could be in the future. It's not that you sit still waiting to see what happens, but it's like, okay, where are we right now? What is we say present position. Where's my present position? Where am I wanting to get to, and where are the connections to get there?
Yeah. It's kind of like using a GPS.
You've got to find out where you're at before you know where to go.
That's right. I mean, I could hand you the most detailed map on the planet or the best GPS on the planet. If it can't figure out where you are today, it doesn't matter.
Yeah.
It can't advise you. And I think the same is true in a lot of different disciplines, but especially in finances.
100%. I mean, most people live in, I don't know. You may be unique. I've got it in my house. You probably have it in yours. A financial junk drawer, or not a financial, but just a regular junk drawer. It's got scissors and batteries and probably a screwdriver. I think that's like a requirement of all junk drawers.
Yeah,
and some tape.
Yep.
Most people live that way from a financial standpoint. They've made decisions over their entire financial life, and some of those decisions were made at the spur of the moment. With no real thought or guidance put into it, but it has lasting effects. I use, with a lot of clients, I use the analogy of buying a car. I mean, you make a lot of financial decisions when you buy a car that don't have anything to do with how much is this going to cost me a month. The thing that nobody ever thinks about is they call their auto or home guy and they're like, hey, I just bought a car. And they say, well, you need to come by the office within so many days and sign. And they never give another second thought to, well, how did he build that policy? And there are some really good, auto insurance advisors out there that really do a great job and really slowing people down and go, wait a second, let's talk about this for a second before we just say, hey, let's go. And that's where people get messed up, is they make a purchase, they never really think through it. They get 10 years down the road and something happens. It doesn't always happen, but something happens, and all of a sudden that decision that I made 10 years ago that I didn't put any thought into now has enormous effect in my world, because now I'm in trouble.
Well, one that for me just yesterday, and I was so thankful, and I'm going to give you and a couple other people some shout outs right here, because I love the fact that you look at things holistically, and I really won't work with anybody that doesn't. So yourself from a financial and life insurance perspective, and then Stephen Williams or Bubba Williams there in Pleasant View at Farm Bureau, J.B. Kent, financial advisor up in Clarksville, and then Kurt Curtis, who saved my tail yesterday. So I bought an antique. I struggle with the word antique when we're talking about a 1999 model.
Oh, that's not an antique.
Yeah, but it does qualify for antique insurance. And so, sent over to him, hey, this is what I bought. This is the VIN. Need to add insurance to it. Okay, here's your two policies. This is the difference between the two. And he said, at the bottom, had a big star, and it said, if you have an umbrella policy, we need to make sure that this reaches the minimums on that insurance, on that umbrella, and you add it to the umbrella. And I would have completely missed it. Now, luckily, because he knows a little bit about me, he had already put them where he thought they were going to be, and sure enough, it was exactly the requirements of my umbrella policy. So he's protecting me from that standpoint. But he also put that big star there, and it caused me to double check. And so that's exactly one of those things you're talking about. I could have missed that if he didn't remind me. And really, kudos to him for having built that in to start with, assuming that I had a umbrella policy. And if I had not done that, if he had not done that, and that was missed, and let's just say, knock on wood, hopefully I never do, but let's just say I got into an accident 5 years from now, and it did not meet the requirements in order to fall underneath my umbrella, well, then it's worthless at that point, and because of something I did inadvertently, just because I didn't catch it, or they didn't help me catch it. So, big shout out to all you guys that do this from a very holistic standpoint in order to take care of your client and their family and what they, the way they live life.
100%. I mean, and that's, kudos to them for doing that, because, I've met a few individuals, unfortunately, on the back end of something. And that's the thing about, I think when we were talking the other day, I think I said, if you keep financial products in the lane that they're supposed to be in, you keep insurance, savings, and investments, and use them appropriately. Don't try to bridge them across and cover, multiple things with the wrong thing. So I say all that to say, with protection, and I'll just speak to the industry. Our industry has done and I say industry, the insurance industry has done a phenomenal job of convincing people that insurance is an evil and that it's a waste of money. Early on in my career, when we moved firms to where we're at right now, I was having a discussion about insurance, and I was still in that mindset of, it's even being in the industry, because everything I did was a needs based. If you only need this much, then, and if you shift your, what I was encouraged to do is to shift my perspective to insurance is really a privilege, because it means you have something of value that you're wanting to protect. At that point, it's like, okay, if you really look at something, let's just take homeowners insurance, for instance. Do you really need the home that you live in? Well, no. I mean, you could make do with a hut out in the woods, as long as it kept the rain off and it was warm. And that's not throwing shade at anybody that lives in a hut.
Right.
But it's, what do you want to happen? Are you paying for something to get the wants back in your life? The comfortable home that you have, the nice vehicles that you drive, the lifestyle that your family has if something happens to you, or hey, let's look at it on the side of you become disabled. Do I want to interrupt my life, or do I just want to have what I need in order to survive? Because there's a million miles between those two options right there. And that's where, convincing, or not convincing, but getting people to understand, use products the right way and know what you've got. I mean, the biggest thing that we do is helping people unpack that junk drawer and say, okay, I go through I guess you say a review, and I ask a whole lot of questions. I've told clients, you might feel like you're being interrogated. That's not my intent.
Right.
But I want to know the who, what, where, why, when, how on everything in your world. And when I have that clarity, that color in the background, then I can look at the stuff that you have and say, I don't think this is really doing what you think it's doing.
Right.
And that takes me, like, there's a lot of products and services that I do sell, but there's a lot that's in their world that I don't touch, but I want to make sure they're done right, because it affects my client, and that's my job. Yeah. My job is to make sure that they're properly protected, that they're moving in the right direction, and having that granular understanding of, yes, the stuff you bought, you're paying the appropriate amount for it, because it's going to do what it says it's going to do. It's not just I hope it works the way that I thought it was going to when I bought it, because hope is not a plan.
Well, I really do see what you do for people very similar to what I do for businesses, in that we're coaches. But there is a fine line. I mean, it's not a fine line. It's a hard line where I can advise you on the pitfalls. I can advise you on what to do next. I can do all those things. But much like Nick Saban is not going to go out on the field and throw the ball or catch the ball, I don't do that for you. Like, you tee up, you ask all the questions, you really prescribe, much like a doctor, you prescribe a solution, but you can't sign their name. You can't make them do it. You give them what you believe is the right thing for them and their future, their family. It's up to them to sign their name, to check the box, to make it happen. Yeah,
I mean, the action, that old adage, you can lead a horse to water. I mean, we can show them the biggest lake in the world, but it's up to them to, take a drink.
Yeah.
And we can back it up with empirical data and research and all these visuals and things of how money really works and how this decision is going to affect the future. But at the end of the day, I mean, and you do have clients like that occasionally. I'm sure you've had business clients that you're coaching. I've had clients that I'm coaching. At the end of the day, they go, I just don't see the point of this. And I'm like, I'm not here to browbeat you into submission. Mm-mm. And maybe we're not a good fit for each other.
That's right.
And when I learned that lesson, that was a major turning point of, I don't have to do business with everybody I meet with because they just may not be a good fit for me. That is such a freeing thing. Mm-hmm. As an advisor that it frees me up to work with the people and gives me more time. I've got a friend who does a lot of coaching with people in the business that I'm in that mm-hmm. He says you have two jobs. Number one is being in front of your ideal client, and number two is.
Team, is Jim Cripps here with the Charge Forward podcast. I just want to tell you I love you. I appreciate you listening. I appreciate you for subscribing and sharing the Charge Forward podcast with people you know and you love, because that's what we're here for. We are here to share the amazing stories, the things that people have been through, the ways that they were able to improve their life so that you can take little nuggets from theirs and help improve your story and be better tomorrow than you were today. I hope that this is the tool you needed at the right time and that you find value in the amazing guests that we bring each and every week. Thanks so much, and don't forget, new episodes drop every Thursday.